Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Happy Easter weekend.
Happy Easter.
Boy, I don't know why I wore a jacket today. It's beautiful out.
It is amazing. 16, 17, supposed to hit 20 today, and even better, the studio's nice and quiet. Just you, me, and Greg today.
Good morning,
no
everybody.
Paul, no Paul. Awesome.
Yeah, Paul's taking the day off.
Yeah,
hiding
okay.
chocolate.
Let's go with that.
Is he hiding chocolate?
No, I heard he's selling eggs to the U.S., but anyway, because they have a shortage there, so he took advantage of
his
the
part-time
Easter.
job.
Yeah, he took advantage of Easter.
Greg is here. Been out and about a lot this week.
Oh, it's been crazy.
Really?
Yeah. It's always a little bit slower coming up to a long weekend, but just getting new exterior photos from some of the listings that had snow from
Nice weather,
2
right?
weeks
The
ago.
nice weather helps, right? So
It sure does. And this week coming up, nuts
Yeah.
out. This is where all the listings are starting to come now.
Oh, really?
Yep.
Are they selling, though?
You know what? Yes, they are selling, but they have to be perfect. They have to be priced perfectly. They have to be spotlessly clean. They have to show the best. And if they are, we're still getting multiple offers on properties.
Really?
Yeah. And selling within a week, but it's only those perfect properties. And I can tell you when I pull up to them to do the photos, I know it's when it's going to be one of those properties immediately.
It's amazing you say that, because the same thing is in place when it comes to if we're getting an appraisal on a property for the refinancing. The better shape the house is in, the cleaner it is, the less junk that's around the house, and again, the value reflects it tremendously. So, we've had a couple of scenarios this year where the house was a hoarder house. I mean, it was like the appraiser said, Frank, I think I saw 2 places where I could see the floor. Like, you just couldn't see the floor in the house.
Wow.
And the client wasn't happy with the value, but the value reflects the fact that the house was just not well maintained. And if you can just keep it clean and tidy, you could get $30,000, $40,000, $50,000, $60,000 in value just on that when it comes to an appraisal, because no bank wants a house that's a risk. And a hoarder house is a risk. If a fire were ever to happen, there's a good chance the insurance company is going to fight and say, wait a second, like, you didn't maintain the house the way it was supposed to, and you actually created the fire being worse than it should have been had you managed the house better.
Well, I think we're seeing that with that exact same attitude with buyers now too, because there is more inventory on the market than there has been in quite some time, over the last few years, and so buyers have some choice now. So they're going to skip something unless it's priced accordingly, unless it's priced where they can put some improvements in. They can go and do some.
But who
renovations.
wants to do that now?
Well, there's not a lot of appetite from what we're seeing, I don't think, for doing a ton of
renovations like it used to be.
Yeah.
No, but people have got to be tight now going into a new property, right? They don't want to be spending extra money if they don't
There's
have
Purchase
to.
Plus Improvement Program, which is all of a sudden we've seen a lift on the Purchase Plus Improvement Program. But again, like Greg says, you still got to price the house right. You can't price your house the same as a house down the street that sold that was a meticulous, where this one might need $30,000, $40,000 worth of work. Like, the two just don't equate. So we are seeing clients come to us with the Purchase Plus Improvement Program where the house needs a new bathroom, needs flooring because the carpet's done. So we are starting to see that, and we say to clients, listen, it's okay to do it. And now, the good thing is that lenders and default insurers have now approved the fact that you can do multiple stages depending on the amount of the scope of the work
That's a
being
big
done.
change, isn't it?
It's a big change. So they'll do multiple draws, but it all depends. I mean, if you're doing a $5,000 Purchase Plus Improvement, they're not going to do multiple draws on $5,000. But we've had scenarios where there's $60,000, $70,000, $80,000, and they're willing to give some money during the draws once the work has been completed, though. So,
what are most of the requests you get for Purchase Plus Improvements?
It could be anything from bathrooms and kitchens to floors, basements, right? So we get the requirements where they want to finish the basement because they want to make it we're seeing more and more people buy properties that have great potential to finish a basement and be able to have family live in it, so that they'll put that second kitchen, which Italians have had so forever, or Europeans tend to love. But they'll put that, and again, we're not talking full kitchen, but they'll put just the necessities of a kitchen, so that someone could live down there. And now again, you got to be careful on the rent side because it has to have separate entrance, and you've got to meet some guidelines.
Yeah, you would need a bathroom. You would need...
Which, again, I mean, I think if somebody's finishing a basement with the purpose of somebody living down there, a family, whether it's an adult kid or it's a parent, that you want to keep close to you kind of thing, if that's the case, then you're going to put a bathroom and a small kitchen and then obviously a bedroom and a family room. And really that's the basis of enough to live on. So we're starting to see that. But if it's going to... We can't use the rental income if it's not a legally binding unit. That's the only thing that I tell clients. So it's great that if it's a secondary unit and it's legal and the city knows about it, then we can use the rental income. But if it's not, we can't use the rental income.
And if you're doing the purchase plus improvements, the value assessment will be after the improvements are done?
Yeah. So what happens is, let's say you bought a house for $600,000, you're doing $50,000 worth of improvements. We get the approval based on $650,000, but at the time of closing, when you get possession of your home, the mortgage is based on the $600,000 less your down payment, and the rest of the money goes to the lawyer's trust account. And then as you complete the work, if it's a multi-stage one, as you complete the work, you either got to provide us with a certificate from the so at the time of, by the way, at the time of application, you can't just say, Frank, we're going to do $50,000 worth of renovations. It doesn't work that way. You actually need to provide us with a quote to be able to get approved for the higher mortgage amount. And then based on that, then once you've done the work, you get possession of the house. Once you've done the work, you provide us with a receipt from the contractor to say that they've done the work. And then the lender or default insurer has one of two options. They can either accept the paid receipt. They might ask for some pictures that the work was done, or they could send for a home inspection to be done. And it's not the $600-700 home inspection. It's just an appraiser goes out there, and we tell them what work was done, and then they just verify that work was done, and then they let the lender know. So
when you're buying a house, then you have to allow for people to be able to come into that place maybe 3-4 times for quotes.
Yeah, and I think Greg probably knows more about it, where the offer's been accepted, but then the purchaser says to the vendor, listen, I'm going to have a contractor come out because here's the work we're planning on doing, and we just need to get a quote on it. So most
you would need more than one contractor.
No, but it could be one contractor that's looking after the whole project for you, right? So, but if it's multiple, you're right. Then you'd have multiple people. You'd have to try as the purchaser, because the vendor doesn't want to be letting people in every hour on the hour kind of thing. Then I would say, if I'm the vendor to the purchaser, listen, I'll give you between 2 and 5 o'clock on this day. Bring in your people, but I'm not going to do this every day for the next 3 days.
Having sold a house recently, it was written into the contract, and the agent at our office, Tim, who helped me do the deal, said, yeah, it's very normal. They'll write in typically from acceptance of offer. There's usually 2 or 3 visits before closing that are allowed within the contract. Now, the seller, and in my case as a seller, I still have to approve those as visits. Like they can't just come, whenever they want.
Knock on the door.
You have to let them in.
They have to request it through the same system that they use to book showings in the first place.
So
you're pausing.
No, I just had a swallow there.
Oh, yeah, okay.
I had I had a strange little swallow there.
Yeah.
So how many people did you end up having in?
What, between conditional and closing?
Yeah.
Oh, well, it's just so I don't necessarily know, because as the seller, you don't want to be there for those types of things. You don't want to be there for showings. You don't want to be there.
But you didn't do the purchase plus improvements. You didn't have somebody come in.
Oh, no. But the buyers who bought the house that I was selling, they took their 3 visits, and they did bring different people in to look at different things. So I don't know the specifics of that. That's between them and their agent and whatever. But it was in the contract, and so yeah, absolutely.
Yeah, and there's ways around that again, because sometimes somebody might have, might be they've sold their townhouse, they're buying a single home, and they want to do $50,000 worth of work, but their down payment's going to be like 40%. So in that scenario, I say, instead of doing the purchase plus improvement, just put 30% down and keep the 10% back, and then do your work kind of thing. Because in the end, it's going to be the same thing. And now you avoid having to get contractors in, having inspections, having the lawyer hold the money. You avoid all of that. You keep the money out. But for those that are buying it with 5 or 10% down, I've seen scenarios where they even were going to buy with 10% down, but I say there's enough with the 5% for you to do your work. Instead of buying it with 10% down, you qualify with 5% down. Just do it on the 5% down, and then you've got the money left out so that you can, you can choose who you want to work with at that point, as opposed to if you do the contract with someone, then the lenders sometimes are very specific about, well, now you can't change because you provide us this receipt, so now we're going to go based on this receipt kind of thing.
Change in that you can't improve, you can't make changes as you go along, you mean?
Well, again, you're under pressure, right? So when you're buying a property, the vendor gives you 5 days to do your financing and home inspection, and also to be able to have the visits. I mean, you can have visits outside of that 5 day once you waive, but in that 5 day period, if you need to bring contractors in, that's where you need to arrange it at that point. And you might get a contractor that gives you a quote, and then you might find somebody else because you can't get the other person in, so you might find somebody else. That's where you got to be careful sometimes. You want to make, I always say to clients, just keep me informed of all these things that you do, because I want to make sure that the lender's aware of it, so that there's no glitches at the end. And another example is, don't go buy a car today if you're looking to get pre-approved for a mortgage in the next 6 months. Don't spend any money. Don't go increase your credit amount unless you're 100% informed that you're still going to be able to pre-qualify should you go ahead and make this transaction.
It doesn't take much to change your score, does it?
It doesn't change much to change your score, or to go from being pre-approved to not being pre-approved for a certain amount. So,
hey, listen, it's tax season. Are you glad you're not an accountant anymore?
No, yes.
You missed that, eh?
No. Not at all.
No.
It's funny, I was talking to an accountant because I'm winding up my dad's estate and all that kind of stuff as well. And so doing all that, I'm like, listen, that stuff can wait till after tax season.
Yeah.
You're understanding.
Yeah,
for sure.
521 Talk, 521-8255. We'll be right back. Greg is in for Paul. Frank is in for Frank. To the phones we go. Say hello to Sean Reid. How are you, Sean?
Hey, good morning, guys. I'm well, thanks.
How's the stock market these days?
Well, it's you know what? That's the great thing. When you invest in a mortgage investment corp like Advanced MEC, you don't have to keep an eye on the stock market all the time. So
You must have people knocking on your door now.
Yeah, you know what? And that's exactly why I thought it was a good time to call in. The last 2 to 3 weeks, it's just been nonstop with people that, you know what, they're a lot of concern, obviously, with volatility in the market, and they listen to the show. They hear about the consistency that we're able to provide, and quite frankly, it is an investment that you don't need to track on a daily basis, even on an hourly basis nowadays, with the volatility in the stock market.
And your returns have been so steady over the last decade and more, right?
Yeah, they certainly have, and just around 8% is typically where we target, and 8.25 is our fiscal year target for this year. And quite frankly, when we're talking about the investments and volatility in the stock market, it's a conversation that I have with individuals that when you're looking at our distributions, we continually pay a monthly distribution. It's an annualized amount of 6%. And then at the end of our fiscal year, that's when we do our top up to get to people, to 8.5% or 8.25%, somewhere in that range. And so it really alleviates a lot of pressure when people are, concerned about the ups and downs and the volatility of the stock market, that they know that their money is working for them. They're investing in private mortgages where, in housing and our space and in our city that we're investing in, there's always a demand and a need for a private solution, a private mortgage solution, which we do continue to see, those inquiries from our mortgage brokers that come to us for solutions for their borrowers.
And again, you're investing in a pool of mortgages, right?
Exactly. So, it's just another layer of protection for investors that they're pooling their funds with all of our investors. And, we roughly have about 100 million, let's just call it, a little bit more than that, that's available to fund out in private mortgages. So you're spreading out the risk among all of the investors. And then ourselves as a company, we're lending that out to people that, need typically a short-term solution for whatever the reason may be. Mortgage brokers such as Frank and the great group of people that we get files from, they need short-term solutions. So, Now, another layer of risk that's being mitigated is we're doing short-term files. So again, people's money is protected, for a variety of reasons.
Do you find investors stick with you over the long haul, though?
Yeah, they do. And then we get, the only times that we tend to typically get people redeem is for, they may just have a temporary need of, well, my kids are purchasing a house, so I have to give them, some money. As we all know, everyone now needs a gifted down payment, and Frank can attest to that, I'm sure. When kids are purchasing a house, like those are conversations that we have, and they say the same story. They say that you guys have been so consistent with providing a rate of return that I know that I can come back to this investment down the road, but I'm also not experiencing any losses, so I can't capitalize and crystallize, my losses in the stock market, so they come to us for that liquidity purpose. But then the same conversations happen; they come back to us in the future.
Yeah, for a lot of clients, again, I'm on the other side, on the mortgage agent side. A lot of the clients that I think fit the profile, and I've had clients call me and say, Frank, I want to invest, but how safe, and I talk to them from the other side of the fence, which is here's the borrowers that typically go to mix like AMIC. And, it's somebody that maybe has purchased a home, but their house hasn't sold yet. So clients think they can get bridge financing because they have a house for sale, but a bank will not approve you for bridge financing, nor will anyone else if you haven't sold your home yet. So then you have to qualify to finance both the homes, and in many cases, the bank said you don't make enough money to qualify for it. That's where the AMIC comes in and says, here's what we're going to do. We're going to lend you the money to be able to buy the new home. In some cases, they can even capitalize the payments if there's enough equity there so that they don't have to make payments on two homes, because that would be stress in itself. And then once the house sells, and what they'll do is they'll blanket both properties, and then once the house sells, now we'll get a traditional mortgage in place for the house that you purchased. So, scenarios like that are scenarios where people have separated and they just don't have a separation agreement. Well, good luck trying to get financing if you don't have a legal separation agreement in place. That's where the MIC will come in. And again, look at it from a risk standpoint. And as long as the risk is minimal, then they'll be able to look and finance it. And there's scenarios where people are self-employed, where they've lost their job temporarily, and we might see more of that with the tariffs, if they happen. So those are scenarios where because I have a lot of clients say, it sounds risky. It sounds like you guys are only lending money to people that really are in really deep trouble, and that's the furthest thing from the truth. It used to be like that 20, 30 years ago, not like that anymore.
Yeah, their credit scores are pretty good, huh?
Yeah, our average credit score always hovers around 730. Which is an excellent credit score for a borrower. Our loan to value, again, mitigating the risk, our loan to value on our portfolio is under 70%. It's 68 and change. So we're mitigating that way. And then just as Frank said, it depends on the market, right? What people are coming to. And we are seeing an influx of files where people are coming to us that haven't sold their house. They are purchasing a house, or there's maybe been a delay in the shift in the market, but they still want to close on that house. So we're doing short-term files. We know that those individuals are going to, move on to a traditional lender, and so their credit scores are strong. Their exit strategy is what we call it, is strong. We just know it's just a matter of buying time. So those are all great files for us, which again, benefits our investors.
And the rates are single digits. The rates are single digits. Like, it's funny how people think, again, 20, 30 years ago, if you got a private mortgage, it'd be 12, 15, 18%. It's not like that anymore. I mean, most mortgages range in anywhere between 5 and 8%, right, Sean?
Mm-hmm. Yeah, and that, for any mortgage brokers out there that are looking for that solution, we can tailor a term. Maybe it's a 1 month, a 3 month, not too many 1 months, but 3 months, 6 months, 9 months. We do all those. We have discussions to tailor a product for your clients, because we know that the people, that's what they need. They don't need in the box, here's the box that we have to play in. We need a tailored solution. So it's having open discussions with our underwriting team to be able to provide those solutions, because at the end of the day, we want to get the money out for our investors. And we want that money back so we can lend it out again. Because a big portion of our revenue that we generate is not only in the interest, but is also in, some of the fees, a lending fee and a discharge fee and so on and so forth. But they're to provide solutions for the borrowers to be able to move them on to traditional lenders. So we have very low rates, mid fives for a 3-month term, and all under 8% right now in our first mortgages, even for a 12-month term. So
your wife must be a very good listener, eh, Sean?
What's that, sorry?
Your wife must be a very good listener.
No, this is the only time I get to talk.
How do we get a hold of you?
613-521, 696-0017.
Do that again?
Yeah, 613-696-0017.
And the website?
Advancebank.com.
Have an awesome weekend.
Happy Easter.
Right, happy Easter, everybody. Bye.
We will be right back. Back to the show. Craig is here. Frank is here. Rates are unchanged. No big surprise, Frank?
No big surprise. I think Bank of Canada acted responsibly based on the fact that there's so much uncertainty out there as to what's going to happen moving forward. Is the Bank of Canada concerned about inflation? Sure, 100%. I mean, that's their biggest concern right now is the fact that tariffs may allow inflation to skyrocket. Came back at 2.3. Very, very good inflation number this week. Obviously, oil prices had a lot to do with it, and the fact that the carbon tax is now removed. Question is, if the carbon tax comes back and you add tariffs to that, then all of a sudden we're in trouble again, and we're going to start to see interest rates likely go up. But right now, I think most economists think that Bank of Canada will be able to keep inflation under 3%. And the call is still for maybe another half, maybe 3/4 of a point drop between now and the end of the year. So
down to 2 by the end of the year?
And 2% is a neutral rate. So anywhere between 2 and 2.75 is considered a neutral rate. We're at the 2.75 right now with the Bank of Canada. So if we can get it to 2%, I think the real estate numbers are not positive out there right now. There are more Canadians still saying that they're likely to wait to buy a home until interest rates come down more. So
would this one have made much of a difference, though?
It wouldn't have made much of a difference. Again, I do believe the Bank of Canada acted responsibly. It was 50-50 going in to begin with. Once the inflation number came in low on Tuesday, the chances grew a little bit. But nonetheless, I think that Tiff Macklem has a good understanding of what he needs to do to make sure that we don't fall into the same trap that we did in 2022 and 23, where inflation ran out of control, and therefore he was forced to raise interest rates pretty significantly in that 60 or 18-month period.
Yeah,
very quickly.
Waited too late. Eh?
Yeah. So I think now he's going to take the right approach, and he's going to see what happens with tariffs. Now, again, there's a 90-day pause. The tariffs that were instituted on Canada went into effect prior to Donald Trump's Liberation Day, and he left those intact. So really, I mean, we're seeing the auto and the steel industry, aluminum and steel industry, the ones that have been hit so far. No other industries to date. But it's interesting to read now all the news and all the stories south of the border where Americans are starting to be concerned. And that's exactly what we need here. Americans are extremely concerned, number one, that tourism is way down. And not only from Canada, but countries across the world have started to stay away from the U.S., and U.S. relies heavily on tourism, all 4 seasons. For them, obviously in the winter, the states down south, but in the summer across the U.S., there's tons and tons of people from internationally to go to the U.S. And if they start to see that go down, as well as the fact that their job numbers have been fairly healthy, their inflation's in check, but then you still have Donald Trump. That's he tweeted this week Jeremy Powell's time can't end quick enough.
I know he wants to fire a guy he can't fire.
He wants to fire a guy that he can't fire, and a guy that he brought in, by the way. And not only that, but he's got until May of 2026. And actually, Jeremy Powell has done a very good job, according to everybody else, except for him, because he wants Jeremy Powell to lower interest rates. We all do. But you can't do that if inflation is potentially a concern with tariffs. The two just don't go together. So...
You can't just make arbitrary decisions on numbers like that?
Yeah, let's just do that. So, I think for housing and, Greg, I mean, obviously that's the area that you and Paul are in. is that, it might be a little bit of a slower spring than we anticipated from a standpoint of there's still uncertainty with Canadians as well, specifically young Canadians, to buy their first property, and they might sit on the sidelines potentially for another 6 months to a year. And then which party gets in 2 weeks from now or a week and a half from now? And then do they actually come through with their promises where they're going to build homes, they're going to take away some of the tax levies that are there so that first-time home buyers can likely get into a home at much cheaper than what they are today? Because today, getting into your first home in Ottawa, I mean, it's a nice city. It's a major city in our country, but you're between $500,000 and $600,000, and therefore just your down payment alone is between $30,000 and $40,000. And if rents, as much as rents have calmed down a little bit, they're still pretty hard to save money to be able to come up with that money.
Are you taking pictures of a lot of first-time homes? Townhomes, that kind of thing?
Yeah, well, there's a lot of townhome product certainly on the market. There's a lot of it being built right now. The city wants densification, so those types of projects. But what we're really noticing is the difference between the price of a townhouse and a small single has gotten quite close now. It's not what it used to be, where a townhouse would be, prior to COVID,
20% more, 25% more, maybe.
Maybe, yeah. Like you're looking at
Then or
difference
now?
between maybe a townhouse at 6 right now and
Single at
a
7?
small single at 7.25. Like
Where before a townhouse would be $350 and a single would be $550.
exactly,
The gap is much bigger.
Yeah, the gap is really closed on that type of product. So it's really situational for the buyers. It's what do you need as a buyer now is what we're seeing. Like that.
And give the builders some credit. Like they've designed some really nice townhouses.
Some beautiful ones, yeah.
That feel like they're single home. They have the space of a single home without
Yes.
all of the land that goes with it.
Yeah. And
Right?
there's some great builders out there. Some of the townhouses, some of the newer developments down in Riverside South, whatever, they're beautifully designed. They're bright, which has always been a challenge in a lot of, like in a middle unit townhouse. It's hard to get a lot of light in there, but they've managed to do some amazing designs that really get some good light in there. So
What are you taking pictures of the most? Condos, townhomes, single-family homes, or is there an even split?
For me, not as many condos this year. Last year we did a lot more condos last year, personally. So yeah, lots of townhouses, lots of singles. Nothing.
And what's the first thing people can do to help you before you get there?
Not be still painting when I walk in the door.
I love it.
I
listen,
bet that happens.
It has happened. That's for a true experience. But
And clean it out, right? I mean, get rid of all the extra stuff.
listen, the photos those are going to think of that as your first showing. So the
First impression.
Yeah, well, it's going to be the first impression once it's online. But even me coming in, think about me as your first showing. Because even then, I'm going to go back to our team and go, wow, that listing on whatever is beautiful. So I'm even going to start promoting it within our team before it hits the market. So,
But less clutter for you makes it easier, right?
less clutter. But what I always tell sellers, when I walk in, we do a walkthrough of the house, and at the end of the day, you're selling the space.
Yeah.
So the better you can show off the space, you keep walkways clear. Don't have the extra leaf in your dining room table. Like, make the rooms look as big as you possibly can for when people are walking through the house. They want to be able to imagine that their things will fit in there. So yeah, keep it clutter-free, spotlessly clean, and priced right, and you got a winner.
How many homes do you think you've been through?
Oh, gosh. Must be around 40,000 at this point.
That's crazy.
So you really have no idea what you're talking about.
Yeah.
Yeah, well, I've seen it all, trust
Isn't that
me.
a crazy number when you think back at it? Isn't it a crazy number?
Yeah, it's wild. I mean, when I first started doing this, like 20 years ago, I never imagined I'd be, through 40,000 houses.
So do you know what you want when you go to look for a house?
No, it's even more confusing now. Yeah, I once was talking with my partner and was saying, if we ever built a house, it'd be the weirdest house. Be a little bit of this, a little bit of that.
Yeah. But you learn, right? From going to every
100%.
house, you learn what the positives and negatives are.
Yeah,
And you can share that experience with the vendors.
definitely.
Out of the 40,000, how many would you have liked to have lived in?
A fair number of them. What I will say, and is that Ottawa Ottawa in general, the market it's a very conservative market here. People don't do crazy builds like you see on like all those TV shows, the New York, penthouses, the homes in LA, like even Vancouver has some spectacular builds. We don't tend to build that way in Ottawa. It's a much more conservative town in terms of architecture. So probably most of them. I like the design of the houses in Ottawa. They're.
And so out of those 40,000, how many have plastic on their furniture?
Only the ones with two kitchens.
Old school.
521-TALK, 521-8255. We'll be right back. Back to the show. Greg is here. Frank is here. We don't know where Paul is.
It's a mystery.
Paul is hiding chocolates for people. He's the Easter Bunny real estate guy.
Oh, he's selling eggs. Selling eggs.
So we have a bit of an insight with you here. How many pictures are you taking now compared to last year at this time?
We're pretty much on par.
Is that good or bad?
Well, I know Paul mentioned last week. I remember that overall the board is down 6%. Our company's up 24%. So it's I think indicative of the quality of the agents that are in our office. And yeah, we're doing really well.
So you're doing well.
Yeah. I'm taking the same number. I took exactly the same number of homes March over March. So.
And your bookings for the next week or two, do they look good?
Next week, I'm pretty much full at this point. I think I have one slot left on next Friday.
And the longer days. I mean, imagine if the days weren't longer.
Oh yeah, well, and that's
right?
That's the nice part about the flow of the real estate business is that as we get into November, December, that's not a bigger selling time. So I'm not trying to squeeze in, photographing 4 houses a day kind of idea. At that time, would be almost impossible.
You get the feeling it's going to be a busy summer?
Yeah, it seems to be shaping up that way. I think. Obviously, the talk is tariffs everywhere. I'm hearing it going into houses with sellers. There's concern, but because of this on and off nature of what's been happening, I think people are just getting used to that as they do with everything.
Yeah, I think once the election is done, we should start to see some changes.
100%. And like I said, I'm full this week. There's bookings 3-4 weeks out already. For photos. So it's, I think it's going to be good late spring, early summer.
Where are you at for pre-approvals?
Lots of them. But honestly, like I said earlier on in the show, a lot of first-time home buyers are saying we were hoping for spring, but now we're likely looking summer or fall. So
the reason being?
Interest rates. Maybe,
but they've come down 7 times.
They've come down a lot. Well, prime rates come down, but you're still looking at a fixed rate in the high 3s, low 4s, and with the cost of housing the way it is, and once you do the math for them. Now, what's really helped is the fact that now they can get a 30-year amortization. That's been a tremendous help. And actually, we had one of the default insurers for a meeting this week, and they said that their applications are up 40% because of the 30-year amortizations from this time last year. So we are seeing a lift in first-time home buyers coming out because of that 30-year amortization. But it tends to be happening more in the smaller centers where it's had a much bigger impact than it has in the big centers because the houses are still very expensive. But you get to some towns where, in the West and in the Maritimes where you can buy a first-time home for $400,000. That 25-year was tight. That 30-year gives them that little bit of breathing room that allows them to be able to move forward and buy a new house. So
is the stress test a problem anymore?
Stress test is still a problem because you're still getting 2% above what the contract rate is.
But
so
it's not as horrendous as it was.
It's not as bad because if you were getting 5 3/4, you have to qualify at 7.75. Where now, if you're getting 4%, it's at 6. A little easier to qualify. The LTI is coming in, so that might eliminate the stress test. We think, we hope, maybe so, maybe not.
Explain what
we don't
that
know. Stress test is any rate you get is +2. LTI is loan to income. So they're testing this system where you qualify for a mortgage up to 4 or 4.5 times your income max. So if they go into that system, in other countries what they've done is they've done away with the stress test of +2. They now qualify you based on the rate that you're getting, so that and lenders will have a percentage of their book that they can exceed the 4 or 4.5 times whatever they decide to set it on. So, but it might be 80% must be within that 4 or 4.5, and then you can make exceptions on 20% of your book so that they can't exceed it on every file, but maybe 1 out of 5, 1 out of 6 files where they can exceed it. And it's scenarios where people might be self-employed. but still it makes common sense to be able to do the deal because they don't show on paper what they actually make. So therefore, they're able to make that exception in scenarios like that.
And where are we at with that becoming a reality?
Well, it's so it's being tested right now by a number of financial institutions, and they're looking at what the data comes back at. I would say that if it goes into implementation, which it kind of is right now, because again they're testing it, so therefore they're keeping track of it. If it does go into play, it'll probably happen towards the latter part of 2025 into 2026.
I'm a little disappointed you didn't interrupt him once, Greg.
I wanted you to because I'm used to it. Like I'm used to being interrupted. Like this has been refreshing.
You're feeling a little.
Yeah, I'm feeling wow. Like
a lot of uncertainty in the studio today. Is that?
Yeah, without Paul actually interrupting like he does all the time. Italians do it all the time. So I don't get offended by it. I think Paul does, but I don't.
Speaking of Paul, getting older.
Oh, yeah, it's his birthday. We all forgot. He just reminded us. Otherwise, none of us would have remembered it. So
he just texted.
Don't forget to wish me happy birthday.
Yeah, at his age, he only knew because it came up in his calendar.
That's right. Yeah. So, happy birthday,
happy
Paul.
Birthday, Paul.
Happy birthday, Paul.
Yep. And a couple of more. Reader, who's on the phone with us, celebrating his birthday on Monday, Sean Reid. So, happy birthday to Sean. Brian Cork from our office, celebrating his birthday this week. Renelle Cochran celebrates her birthday, and unfortunately for Renelle, I want to send out condolences because her mom passed away this week. So condolences to you and your family, Renelle. Not going to be a happy birthday, unfortunately, because you're in Newfoundland with your mom, and again, thoughts to and prayers to you and your family.
And what about the Sens? Any messages?
Sens, go. You know what?
Go Sens, go.
They're underdogs. I'm gonna play the card that everybody's playing on the Sens. They're underdogs. They're expected to lose. So if they win, boy, it's going to be ugly in Toronto. But if they lose, they've made the playoffs, and they've gotten us excited for years to come because I think this is the beginning of just making playoffs for a number of years like we were used to.
They can't lose to the
I hope
Leafs.
not.
Can't. Just can't.
I hope not.
Anything, Greg?
No. Just to remind everybody to support local Canadian businesses and charities.
Yeah, way to go.
Don't travel to the U.S., anyone, okay?
Happy
It's not worth
Easter
it
and a
right
great
now.
weekend, and a happy birthday, Paul.
Yes.
Have a great
And
weekend.
Happy Easter.